Hi, this is Brent with Trade Therapy, and welcome back to the Trading Couch. We're talking about Disney, our Clarity Spotlight last week. We haven't looked at Disney since May of last year, so we're going to take a quick look back and talk about what it looked like back then. Then we're going to run through a current weekly and a daily, so you'll see what our plan is and what we're looking at. If we decide to get involved with Disney, we're not currently in Disney, not involved in any of the tickers that we covered this week. And just as a reminder, as with all of our videos and all of our content, this video is for educational purposes only. It's not intended as investment advice. Trading involves risk. Do your own due diligence, do your own homework, trade according to your plan and according to your own risk tolerance. This was what it looked like back in May of last year. We had been tracking this markdown process in Disney for quite some time. You can see the Wyckoff labels that we had put into our chart identifying some of these events. We had been targeting this spring zone for quite some time. Jump over to a chart, a little older chart back into 2023. You can see that we had been watching this liquidity zone right in here and watching for the spring to develop for quite some time. And after it developed, we saw it breaking out of here on volume, reclaiming all of its moving averages, very quickly pushing up into testing the top of this accumulation range right here, where it had come back down and testing the 200-day exponential moving average and right in the middle of a big gap right here. So that was the situation we were looking at back in May. We had really been watching the reaction that we had gotten out of the spring and were wondering if demand was really going to step in and support price at this 200 a daily exponential moving average, or was price going to continue down and fill in this gap? And even then, would it continue further down to test demand back towards some of these previous levels? Or was demand going to come in and push price back up and out of the range at this point? So really the message back in May of 2024 wasn't that Disney was about to break out and run here. It was really, we needed to see demand step in. We needed to see what levels demand was going to defend before we could get comfortable with identifying the next leg of the markup campaign. We wanted to see if there was going to be some additional downside pressure or whether or not we'd see price find stability at this point. So that's where we left off. Very mature accumulation range here, but really needing to see follow through, whether it be to the upside or to the downside. And if we jump over to a current weekly chart here, we can see that back in May of 2024, when we were looking at it, it did not find support here. It did break down, and we did see price come down, test these levels, and then find support, and again push back up to the top of the range. However, you can see that the move off of the low was done on relatively low volume, below average. And then this big volume spike came in as price pushed up to the top of the range here. And the volume spikes pushing up into the top of the range like that usually indicates profit taking. That would indicate that there might be a flip into a short position, which is exactly what we see here. So what we see is institutions in Wall Street trading the range from the bottom of the range to the top of the range. This is often called railroading, when they push price up and down through the same price levels over and over again. The idea is to wear anyone out within the trade. If anyone wanted to go long, by the time they get shaken out twice, Wall Street and institutions that are accumulating at this level are hoping to shake all of them out. That's why they do this. And so we did see it break down. We did see it push back up and test the higher levels again, and then come all the way back down and test the previous spring level here and test that previous low right there. So really brutal price behavior. Anyone that thought they were going long, catching Disney breaking out of its accumulation range right here, likely taken out of the trade. We have seen volume step in here at this most recent low, did push price back up to its all-time resistance line here. We can see price settling in as these moving averages constrict the 200 weekly exponential moving average. That blue one is settling nicely right in here, as well as the red 55-week exponential. And all of the weekly moving averages are all clustered right here. There's last week's big shakeout candle there on high volume. So what we're looking to see right now, and when we look at this, we see a very mature accumulation range. We do see railroading price behavior throughout this range. Generally, that will indicate that Wall Street and institutions should be ready to move up and out of this range and continue on with their campaign at this point. We'll need to see price find stability here. We want to see price come back and turn this level into active support. We want to see it reclaim this structure right here. You see the volume point of control is right at this level. We want to see price get up over that and establish control and turn this into active support. Or if it comes back down, if there is additional downward pressure placed on price, we want to see that higher low be put in. We want to see it quickly get back up over the falling moving averages at that point, and then break up and set up for the next markup leg from there. So that's what we're looking at. That's what we're seeing in the weekly chart, a series of resistance at the same level here. We're looking for a higher low, and we want to see this level broken to the upside. If we look at a current daily for some additional insights, we can see that there's a big gap, a big soft spot in the chart right there. So that's why we put our speculative C wave down here below that range. You can see that we have shadowed this really inefficient range that price has very quickly moved through multiple times. So we do see the possibility for a potential quick move down here to fill this gap, and then a quick move back up and out of that inefficient range right there. By then, these moving averages will be falling over. We'll want to see a higher low put in. We want to see volume come in. We want to see price get back up over these moving averages. If it breaks down here, get over those moving averages, back test them, turn them into support, and then take another run at this all-time resistance level and come in here and see if we can carve out a higher high at this point. That's what we'd be looking for if we were to get involved. We want to see our plan play out. It is possible that buyers may step in, demand may step in and defend this gap right here. It may try to put in a higher low at this point. If it does, that's fine. The same evaluation criteria is going to hold. We're going to want to see price quickly get back above these falling moving averages. We're going to want to see it turn this level into working support, reclaim the structure, and then get up and out of this a resistance line, back tested into support, and then push off into the next campaign. All in all, very healthy looking accumulation structure, a very healthy looking longer term chart for Disney, a big cup structure right here. We're looking for it to break up and test these all-time highs, possibly put a handle on a larger cup base right here, and then set up for the next leg of their markup campaign. So very mature accumulation structure. We're not in Disney, watching it very closely. Want to see price turn this level into working support. If we can get that, we may consider entering a Disney in for a long trade at that point. I hope everybody enjoyed Clarity. That's all the time we've got for Disney. We'll see you next week.